All right, welcome everyone. Welcome to the 5ers live trading room. It's Wednesday. We got CPI day, we got live trading, and we got Pedro with us today. How's it going, Pedro? Welcome.
What's up? Welcome.
And Victor.
Nice to have
Victor
you, Pedro.
as well.
Welcome everyone. Yes. We're part of the party as well. And by we, I mean I am.
That's right. And I'm just going to I'm looking at the markets. I've been looking at this for the last 20 minutes or so. I'm looking for a potential long on EU here, looking at the lower time frames, and as always want to get a feel for the higher time frames, trying to get right into the action as quickly as possible here. Guys, let me know how you're planning the CPI. Are you going to be trading during the CPI news event, or are you going to be staying on the sidelines? Of course, it's probably best not to trade, during the actual news event. But I know, Pedro, that you were. I'm not sure if I remember correctly, but you said something about that you like to trade news events like this one, right?
Yes, it depends. I'm really restrict on terms of what I want to look for when there are news events. So to be honest, anytime there are NFP, CPI kind of news, when we're expecting high volatility in the market, I actually like to be involved in the market either half an hour, at least 15 minutes before the news event, which means that I'm hoping to get that initial move in my direction, where most likely I try to take at least some profit straight away and then kind of gamble into the news. So I gamble in the sense that if price goes in my favor, then I get a second position with a bigger risk reward. If price goes against me, most likely I'm not really losing any money because I already got the first target in. But to do that, I need to see a clear level that price is respecting. I need to see some indication that actually price is about to go in the direction that I'm expecting. Otherwise, I can easily if I don't really see anything standing out to me, I just skip it. That's my approach.
Yeah, I mean that's what you have to do in trading, right? You gotta be patient. You gotta wait for the right things to appear on the charts. Victor, how are you approaching this? How would you if I had I know you don't really like trading around news events at all, and you're not really trading actively on the lower time frames, but you have to do that now today. So how are we gonna set that up? What's your plan?
Well, normally what I normally do is I trade as usual. I just know that I need to know in advance, right at the beginning of the day, if there are any high impact news, and if they are, then I need to have some alarms, some alerts put on. So because I want to be either completely out of the market before the news hits, or if it is going my way and I have enough room to absorb the risk and the volatility, then I want to leave it open and able to see if I can catch the move that comes afterward. The same way with Pedro. The only thing is that let's say 10, 15 minutes before the news, I do a little analysis, a little calculation. Is the risk reward still worth it for me? And I need to assume a different risk reward than when I enter, because when you enter, of course, the risk reward is based on your stop loss, but that stop loss is not going to be there is a chance that that's not where you get failed when it goes against you. So I make, based on where I am at that moment before the news, I make a new assessment of what is the actual realistic risk reward of that trade, and if it's still favorable, I'll leave it on, or maybe lower my risk. But if it's not, if I'm too close to my stop loss, then I'm going to assume that if it goes against me, there is a chance that my loss is going to be much bigger than I anticipated or that I wanted. And in that case, I better just close it and not risk it. I'm not here to gamble. I just want to be taking good trades with probabilities in my favor, and not oversized risk, which that's what it would be if I leave it open and it's too close to my stop loss by the time the news comes out. So there's a little dynamic approach there, but typically the signals are the same, right? So I don't have a specific strategy for news event. It's just I take the same strategy, the same concepts, just I adapt for the circumstances at hand, which is a very high volatility, or at least that possibility of that high volatility coming in, and the slippages, the risk of having some kind of slippages. Those are the adaptation that I take. And if I close the trade, let's say before the news comes out and the signal is still valid, the idea hasn't been invalidated, then after the news, a couple of minutes afterwards, but it can be also 50 and 30 minutes, I will revisit if it still makes sense for me to replace the position. If that's the case, then I will of course be putting on the position back. Not the same way, but I'll look for another setup to get into the same trade idea.
All right, so I'm currently looking at a long here on EU, hoping that I want to really see the 5-minute candle getting above this level before taking a long right here. So I'm looking at this move to the upside right here. Now we did see the 1 minute closing above this resistance, and we can also see on the very low time frame that we do have some bullish momentum coming into this level. And of course this is on 1 minute, and looking at patterns like the like this one right here is not I mean, price action is fractal, and but you also have to put this pattern into context here, and I don't think this is the right area for a pattern like this one on the 1 minute. But we do see a higher lows at least leading into this level. But what I'm waiting on is on the 5 minute, and that's going to close in 4 minutes. We just had that candle closing, and you see that you definitely have a resistance area right here. But I am thinking that if we do reclaim that level, we might see a move to the upside here on EU. I wanted to show you something else here on EU. So yesterday we had a move on, we'll look for a short on EU, and I don't know if you guys remember, but I got stopped out on that move. But look at this. Look what happened right after we ended that live stream. So I was looking at the this channel right here, right? So here we had the channel, and I was looking to go short around this area. I had my stop loss a bit too tight, so we got stopped out on that one right there, but then it went straight down, actually hitting that level that we wanted to trade it to. So the overall idea is correct, and why I'm showing you this is because this is an interesting demonstration of the difference between analysis and trading, where analysis is making plans, looking at the markets, and actual trading is all about execution. And not only execution, but where do you put your orders? Where do you put that stop loss? I mean, we could safely say that, yes, there is a statistical probability looking at this pattern that once we hit this over this high area of this downwards trending channel, there is a statistical advantage and probability of us seeing a rejection here. But we don't know when it's going to happen, exactly how it's going to look, and what the volatility will be on the retest. So that's why trading is so difficult, while I would argue that analysis, technical analysis, is not really that difficult. You know, it's not really that complicated, but actually knowing when to enter and putting any orders, that's the complicated things. And I don't know if you remember, but I actually said, you know, I want to enter here, and I should probably put my stop loss above that high. That was my initial idea. That was the idea that I had as soon as I saw this price chart, and that was the correct idea. And I know I've talked about this in the past. Your first initial idea when you see a trade setup is a lot of times the best idea, because at that point you don't have the time to go through all the options. What you do is you instinctively know that this is the right level to put your stop loss, because I believe at that point you're doing it intuitively. If you've been doing this for years, you only really have to look at price action and immediately you know, yeah, that's the level where I want to put my stop loss. But then I start thinking, right? I start thinking, but what if I put it here? That's going to give me a much higher risk to reward, and it's still valid. But that was my initial stop loss level, and that's where I should have put it, because that's based on intuition. And when you've been trading for years, trusting your gut feeling, trusting your intuition is actually something that you have to play around with, because sometimes, like I said, the initial idea is the best idea.
By the way, there is a viewer, Rishab Mehta. That person has a question, but before we answer that question, guys, this is for everyone. If you repeat the same question in the chat, we consider that is a sort of spam. So watch out for that. If you do that, you're risking us, taking you away, even banning you, for the sake of having a orderly chat. So just take that into account. I don't want to ban you right away, Rishab, because you have a question here, and I don't want you to get the impression that we don't to answer you that question. But just keep that in mind. If anyone does this, they will be risking getting banned on the chat. And about the question, if there is any spread, I didn't notice the spread on gold, what you're talking about, Rishab. And if that is the case, the proper or the correct way or the proper place to ask this question is for the support team of the 5ers. We are not support, so I wouldn't be able to look into it and have a great question for you, a great answer for you. So please do that. You can hop on the website. We have live agents, and you can, if you're part of the Discord, you can as well talk or even email our support agent, and they will be happy to assist you. But just keep in mind, spamming is not tolerated on the chat, just so you know.
Yeah, that seems quite high though. That's very high, and I do understand people's frustration if you were actually trading that and you get stopped out on that because of the spread. So reach out to support, ask them why it happened, everything like that. So, but I understand, if you're trading that and that happens, then of course. But you also have to take into consideration, like this is part of trading. It really is. Like I got my personal account on Oanda, and I remember trading gold, and that's like we had a wick of like, one of the most insane wick, and it took out such a huge portion of my trading account. And Oanda basically said like, oh, it is what it is. It's absolutely, whatever. But things like this happen, unfortunately. Things like this happen because that's just the dynamics of the markets and all the different brokers that we play around with.
Yeah, it's go ahead, Pedro.
Yeah, spreads is a complication. It's much better nowadays. I still remember a few years ago, before the news, there would be like 100 pip spreads up and down, wiping out every orders, and then the news would come out. So I'm still from that time. Nowadays is much better. There is no comparison. Yeah. But yeah, that must have been a mistake on gold for sure. I try to figure it out. Is my sound better, or is still too low, or too much noise? Or
there's nothing wrong with your sound or your voice or the volume of, but it's there's a
echo.
Not an echo. There's a like a disturbance in the background where you have like not sure what that. It has something. It must be something with your microphone being too close to your speakers or something like that. There's a. I don't know what that sound is called, but it's there's a disturbance in the force, Alex says. Yep.
Okay. Yeah, I'll try to see how to improve it. But okay.
I think reverb is the right.
Yeah, perhaps.
Right. Yeah, maybe my PC is making background noise. I don't know. Maybe.
But no problem. Let's see. We have maybe I can show my screen because we still have like 12 minutes to the news. And of course, before I can do that, I need to actually put my screen on, which wasn't the case. Let's see. There we are. All right. So yesterday, this is what I'm looking for EU for this news, right? Yesterday we talked about the quasi on the higher time frame that has been formed, and the fact that we have a lot of alignment all the way to the weekly time frame, right? The monthly doesn't give us anything, but the weekly does. We have a quasi where this is the left shoulder, that is the head, that is the break of the neckline is actually here, so that officially makes this part the left shoulder, but it doesn't matter. It breaks the neckline, and it comes back to one of the two possible areas where price might, if it is going to reverse, it might use as order blocks or area to reverse. And we tapped into that area on the weekly time frame, on the daily, and actually not only before we go to the daily, the weekly as well. After we tapped into it, it formed a bullish engulfing, right? Further cementing that idea that price is trying to go to reverse direction, at least for some time. And on the daily time frame, we have a daily quasi as well, where this is the left shoulder, that is the head, that is the neckline that got taken out on the 6th of December. And now we are getting into that area. It is not a great area because it's quite wide, but it is what it is. That's what price action is telling us. This is the area that buyers are likely, if they're going to reverse price, they are likely to defend this area, and we already tapped into it. So that is on the daily. And on the 4-hour, I have a couple of areas, structures that are good candidates for a possible reversal point. These are based on the H1, and since I don't have any H4, only in H4 here, which is this order block, right? And the only place I have overlap between those two time frame is the between those yellow lines. And as you can see, if we zoom in, to me, in my analysis, we haven't reached that yet. So that's a reason for me to sit on the sidelines to wait for us to tap into this area before I try or I start looking for a setup on the lower time frame. If I go to the 1 minute, you can even see that we are reacting quite nicely right on top of it, right? I'm gonna drag this a little further, but you can see that we haven't reached it. We haven't reached that area yet. So maybe it's going to bounce from here. That's quite possible, front running the actual area of interest. But I need to follow my rules, and I have the rules for a reason. And the data that I have is based on that. On the rules that I have are based on my data, and my data tells me to wait for that area to be tapped into, right? Does it mean that we're still going to go lower after the news? Perhaps. If that happens, then I'm going to be looking for a reversal pattern on the lower time frames between those yellow lines. But if we reverse and go up, then I just accept that it's not my setup, it's someone else's. It might be yours, but it's not mine, because I need to follow my rules. And that's my approach for the news on EU. I'm going to be waiting for price to tap into that area. And let's say it goes before tapping, it doesn't touch it. I'm going to be waiting for it to break the neckline on the H4 quasi before and come back before I participate. So I either get in on a reversal pattern within the yellow horizontal lines, or when it comes back, if it does so after breaking that neckline. So that's my game plan for the coming. That's going to take some time though, so it may be something for today, might be something for the rest of the week, but that's basically my game plan for EU on this with my normal strategy. Of course, I can look for entries on without having those high time frame alignment. If that happens, then or not if that happens, I already see some kind of quasi being there, that the left shoulder, the head, and I could be looking perhaps after the news, depending on how it comes out. I could be looking for some entries, but these are more I call them discretionary trading, because these are without the alignment, and the alignment is something that I require according to my game plan. So I consider those discretionary, and I know I should lower my risk when I trade outside of my strict game plan or trade plan, I should say. That's my view. That's how I'm going to attack the news today.
Pedro, is there anything specific you're looking at?
I was actually trying to pay attention to Aussie dollar, New Zealand, those assets. They have been quite bearish recently, and in my opinion, I think they just broke an important low, and I think we can start seeing some bullishness in here. So
well, you're free to you're free to pull up your chart.
Yeah.
Maybe you want to show what
Yeah,
you're looking
I will
at.
try to exactly 1 second. Yeah, I think you need to allow it.
Yeah, let me pull it
Yes,
up.
hold on.
Right there.
Yeah. So yeah, we were talking about euro and so on. Euro, I'm still not exactly sure if I want to be involved at this point. Still on the long, but it makes sense for me where price is reacting right now. But what I was looking more is on the Aussie and potentially New Zealand as well. So price just broke this important low and getting a little bit closer into this range in here, and that's a little bit what I'm looking for. So I've been waiting all this time for price to eventually go all the way and break below this low and getting into this structure. And I'm going to pay attention if there's any chances or not of a reversal in here. I do like to see that price already broke some highs in here on the way down. So that's a little bit of signs of bullishness for me. But of course, you need to confirm here on the overtime frame. Maybe there was already a possibility to look for an entry. Price indeed. Vitrified out at level. It's reacting from this kind of demand zone in there, so I like it. I think we could see a little bit of bullishness. There's been some news as well the last 2 days in China. Some ministers or someone important has been mentioning or talking about the China's economy and potential more stimulus into 2025. And anytime we see that, we can see a little bit of bullishness as well on the commodity FX pairs and talk about Aussie, New Zealand, and so on. So that's maybe something also to pay attention to. We had interest rate decision in Australia yesterday. It remained the same, but it looks like that the market is pricing in at this point a 70% the odds to a rate cut in the next meeting. I'm not sure if it is in February or not, but that's something just to keep an eye on as well. And you can even look at the other Aussie pairs like Euro Aussie, which may be close to a short. And you can look at correlation in this case at other assets. But New Zealand as well, I think is getting really close as well. So we just fake out an important low in here and maybe getting closer into this level. Overall, bigger picture, I do think that maybe there's more downside. But for now, I was looking for potential reaction from here. And then CAD pairs as well, because today we're going to have Bank of Canada interest rate decision. That's going to be something else also to pay attention to. It has been quite bullish. We can look at CAD after the CPI, just in anticipation for the interest rate decision as well in Canada. Yeah, those are.
I like that. It's going to be interesting to definitely going to be interesting to see how we move from there.
Yeah, so we are basically 2 minutes away from the.
I got my open. I got my your USD trade open, and it looks like it's about to hit TP. Let me just bring that up. Should be that one. Yes, I got it right here. I'm hoping that we'll be able to. So that, all right, just hit TP right there. So my entry, I believe, was up here. I had my stop loss a little bit higher. Just a quick trade on that one, and I'm gonna break it down a little bit for you, and I want to show you guys. I want to show you guys something I have. How I got my setup all set up here. Let me just
1 minute and a half to the news.
Okay, so I'm gonna open these again, and we'll see. This is on the 1 minute here, and we'll see if we get anything here. And I'm going to be adding an extra camera that I have set up to show you the setup I have
Behind
here
the
when
scene. The
behind the scene is set up
look.
you know what it looks like here when I'm scalping. You can see the screen in the background. I used to have that on top here. Now I have it in the background because it looks awesome. There's no like I don't use it at all. It just looks cool. And then I have so let me see if I can open this up here. So what I have is you can see it's a very small one, but you see this one right here. That's the main analysis screen, right? So this is where I have the four different windows. You have on the upper left Euro USD, and then you have gold, GBP USD, and Euro NZD, and then here to the right of me you got MetaTrader. This is where I'm executing all the trades, right? I also have on the right screen a trading view screen with the higher time frames as well. So I can on the front screen I can look at the lower time frames, and on the right screen I can analyze the higher time frames at the same time. And then here on the iPad I have the website Financial Juice up, and that will give me all the information. That will give me live updates on the CPI numbers. It's going to tell me what the numbers are, and I can see if there's any major news headlines coming up. I can see that right here. So if I'm in I should have maybe had that trade open. Okay, so USD CPI comes in as year to year, as forecasted, month to month forecasted, as expected on everything with CPI. So we shouldn't be seeing anything crazy. And looking at this is not really crazy. But by the way, I really like this financial juice. You can have it, you can see right here, everything comes up in like very, in red, and it gets updated automatically. So it's pretty cool to have that up on at least one tab when you're trading. Yeah, so this move that we're getting right now in the 1 minute is not really something out of the ordinary. We can look at if we look at the 4 hour, we can see that this is just nothing. This is just, within almost the same range as the previous 4 hour candle. We can go out to the daily, and we're not really seeing anything massive here. Now, of course, on the lower time frames, you will have big wicks, and it's going to look like some massive moves on the lower time frames. But if CPI would have come out much higher or much lower than anticipated, then these moves could be quite insane. But now that we have the actual news move, one thing that I like to do is to trade the opposite direction of the news move. And you can see on the 1 minute here how we had an initial move to the upside right here, and that quickly got sold. Now, I like when it aligns with the overall trend, and it kind of does. If we look at Euro USD from this perspective, we do see that this move aligns with the overall trend. But then again, Euro USD, it feels like it's not really giving us a good looking trend. There might be other pairs out there where you have better looking trends. I like Euro NZD. You look at Euro NZD on the 1 hour, this is a very good looking trend in my opinion. And you have a level right here. So if you go into the lower time frames, so 15 minute, at this level right here, might be able to perhaps find some type of entry down inside this area, and that's probably what I'm going to be focusing on now after Euro USD. So let's see if this level holds. That could be something interesting. I'm seeing some comments on Bitcoin, so we want to make sure that we check out Bitcoin as well.
I have it on my screen as well. It's there has been quite a pop, a $500 pop from the news in the last 4 or 5 minutes.
Yeah.
So that's a very nice for all those Bitcoin holders and traders. That's a nice move from the news.
Yeah, when something like this happens on gold, on Bitcoin, I think everyone's still very bullish, but they're just waiting for the CPI to make sure that there's nothing out of the ordinary going on, and then when the news comes out, they're just gonna re-enter and start buying because everything is as it was before the news. So there's no reason for Bitcoin to move lower here, in my opinion. Pedro, you shared an analysis before. You shared an analysis before the news. Any update on that one? Did you take any trades, or what are you watching?
Yeah, I'm just watching. I haven't taken anything. New Zealand and Aussie, they are slightly higher than I wanted, so I would like to see it retested to the lows. To be honest, that's more of what I would like to see. Yeah, I'm just following. There was this initial reaction that we saw now on CPI. I don't think CPI at this point is really a concern for the market. I think CPI may start being concerned again only after Trump gets into office, mostly paying attention to what kind of tariffs is he going to apply or not. So I don't really think the market is that concerned. Again, the data was actually as expected, so it's just this initial reaction. Yeah, we'll see. But I think we can go. It could be close to potential turn a little bit. I'm just not really 100% sure, just because I'm not sure if I like where the dollar is at this point yet to completely sell from here or kind of start dropping from this level. If the dollar index was in a better level to start looking for shorts, I'll be even more confident on the longs as well, on the Aussie and New Zealand, and eventually potentially on the euro dollar as well.
Yeah,
it makes sense to level. Can I share my monitor on the?
Definitely.
On the dollar index. Because basically what we're having here since the last few weeks, or since basically for the last couple of weeks, we had dollar index making out that move to the upside, breaking this important structure in here, which in my opinion I think is still an engulf to the upside. So I do expect eventually dollar index to continue to push slightly higher, but when you do break such an important high, usually you have a retracement. So we are having that retracement. Now, this retracement has been lasting at least for 2 weeks. It may even go a little bit longer, because the initial push to the upside, it lasts 2 months. Okay, so even in terms of a timeline in here, it's okay if we do have those retracements that last maybe 2 weeks or a month. And we then started to break some lows. Like last week, actually, when I was even in the stream, that I mentioned that euro dollar, in my opinion, hasn't really broken a high that, in my opinion, would start giving indication that we wanted to for a move to the upside. I think Victor was in agreement with me in terms of which structure he was looking to for the euro to break to the upside. In reality, the dollar index had already broken a relevant low. So usually we look at the correlation between dollar index and euro dollar. We can look a little bit more into detail, which also it goes into seeing which levels actually are being respected or broken between those assets. So in my opinion, dollar index had already given information that it wanted to go lower. Euro dollar hasn't really given that information, but now I kind of bought a line in here. And then we created a double top last week in here. And in my opinion, I think that will be kind of asking to be taken out, at least to be faked out, which is basically where we are right now. So I do like this level. I do like this supply where price is reacting right now, because it's fresh. It was also the move that actually managed to break out this structure here on the left, and we have a little bit of this liquidity. So if by any chance price and dollar index does want to start moving to the downside from here, I'm kind of okay with it. I'm not really going to fight it. However, I could see eventual price getting a little bit higher. But yes, I'm okay with the move yesterday, or this high here created yesterday. I still didn't really want to look for short on the dollar index. Now I'm much better. I like also the level where the euro is reacting to. From this level, it was also fresh. So if by any chance it wants to go higher, it can. But I'm still open to the possibility that price could retrace a little bit deeper into these lows as well on the euro dollar. So yeah, there's those two scenarios in here on the euro and the dollar index that I was looking for.
It makes a lot of sense to me as well,
Okay.
Pedro, how you're seeing that the Dixie is breaking structure, meaning on the euro dollar, you can expect some kind of push to the upside, but on medium long term, you still expect price possibly to be visiting lower prices, and that's exactly my idea as well. We are just starting to get into those on EU on those demand area, but typically it doesn't. Well, sometimes it just touches and takes off, but a lot of other times, the majority of times, it actually needs more time. It needs more time to mature to do those reversals. Sometimes, push those, even squeeze those order blocks, those demand areas before it actually, makes the move to reverse. So I'm with you on that analysis, Pedro. It makes a lot of sense to me as well.
Yeah, and then in my opinion, like if you're talking about breaks to the upside, I know that some people they like to see a break and a close above a level. I think I'm with you, Victor, on this one. I just want to see a break. I don't care if it closes above or below the level. I just want, even if it is a 2 pips move, breaks of a high, for me it's important. I consider it that as a break of structure, and did that happen? Like that move happened actually with the NFP on Friday. In here on euro dollar, right? We did manage to break the structure to the upside in here. So now the question mark is: are you going to, again, two three scenarios could happen from here, right? Price could just break out and go. It could break out, retest a little bit into some structure, which this one is valid. In my opinion, it's one of the fresh levels in here, and maybe go from here or have a deeper retracement into this level and potentially go to the upside from here, right? And the way I sometimes look at this in goes, because when you are trying to see breaks of structure, it matters as well to see why is it happening, like what's the reason for it. But for example, the way sometimes I like to think about it is, if the euro dollar just wanted to continue to push to the downside, I don't really think there was no need for price to break structure, right? Price could have just continued to respect the structure in here and just push down and continue to move to the downside, if that's kind of the overall idea on the euro dollar. If by any chance it starts breaking structure, okay, you can think about this as liquidity grab, right? Maybe stopped out everyone that was trying to short in here, but breaking that structure, in my opinion, is kind of an indication that price wants to go higher in the future. It's just a matter of question of when that move is going to happen, and there are a few levels that you can try to look for in here, right? So again, just even in terms of patterns, quasi-modus, and so on and so forth, you can try to understand or kind of decipher as well how actually that break of structure occurs. And if this is kind of just a lone break and then price moves, that's even, in my opinion, an even better break to the upside, kind of an engulf. If price breaks but then retests this level, that's a little bit more of a question mark. That may be actually a bearish sign in here. If price breaks and then retests straight away this high that was broken in here. Yeah, but that's another topic in terms of looking at the pattern.
I'm 100% in agreement with you, Pedro. I think that wick is a break of structure. It is in my book. To me, it is after many thousands of hours of screen time. To me, it is analogous to the market showing its intention. Right? It is like when you're in a poker game, you get a glimpse at what the other person has in their hands, right? You know what they're trying to do because they let you see something that wasn't visible yet, and that wick is the intention of the market, in my opinion. And it doesn't mean it's always going to go up from here, but that's how it becomes. That's how it becomes, or how it begins, I should say. It begins. In reversal, you will see they will break those structures before, and it'll come back, and it will perhaps even try to convince the market that we're going even lower. But to the reversal traders, and you said you're a counter, you're a contrarian trader, Pedro, and that's I recognize that, because that's exactly what you're looking for. You're looking for those signs where the market is telling you, everyone is thinking I'm going lower, but actually I'm already started that upwards move, and that's exactly where I want to participate as well. That's why I'm looking for the buy in EU, but I'm not ready yet, because I want to see those reversal patterns on the lower time frames at those areas of demand that we haven't tapped into yet. So perhaps it's still to come. At least those are my cues to be waiting on. But I'm 100% with you on that, Pedro, on that analysis on EU breaking on that wick.
Yeah.
Okay, so I'm
And
currently
Bitcoin
looking at.
Go ahead.
Yeah, sorry, I'm currently looking at the Euro NCD. So I'm just going to pull this up to kind of update you guys on what I'm watching. I'm not long on the Euro NCD yet, but if you look at the 1 hour, we've added the fib from that low to that high, and we have the reload zone right here in the 0.618 right there. We're hitting that level right now, so I'm looking for a reaction here on the lower time frames. And looking at the 1 hour, I want to take profits around these highs up here, and I want to make sure that I can get in on the first initial bullish reaction at these levels. So I'm currently I'm updating my stop loss here for this potential trade, and what I'm looking at first and foremost is a move back to the CPI dump. That already happened though, so you see the initial move, and this is what I talked about in the beginning of the live stream, where you have the initial move to the downside, then price starts coming back down, hitting the lows of that move, and then start moving back up where the break lower happens. So but the range here is just very small for that. But what I'm watching right now is this structure. So if we get something like this, then this will be my trigger to enter this trade. So we'll see.
I'll challenge you on that. Jonathan, I'm going to challenge you on that, because if you zoom out, not just on 1 hour, actually look left, look where price is reacting to on the left side.
Oh yeah, definitely. I mean, it's definitely high time frame resistance right here. I'm also watching this. And
yeah, that would be initial target. If by any chance, if anyone was short from the highs, that could be initial target. I'll just be a little bit more cautious with the longs, because we are getting into sellers territory from where price is. Interesting enough, Euro New Zealand is the opposite of New Zealand dollar, and there you go. I was actually looking for a long, and New Zealand is just going away without me at this point. Just be careful where prices react, because they are getting into the sellers territory. So looking for longs, it's more of a taking profits at this point. If you were long, kind of from the bottom, something like that, I think that will be more of a take profit situation, and maybe sellers starting to jump into it. But I like the level. That's the level that you are looking to get long. In my opinion, it's one of the last levels that you could still consider as a continuation. If that level breaks, maybe you can shift.
Yeah, one could also argue that, I mean, of course, this is high time frame. High time frame resistance right here, this whole area. But one could also argue that this is the area of interest, where you had most of the reactions, and then of course that's the area of interest. And we have a confirmed breakout here. So looking at the 4 hour, there's a confirmed break of resistance, and then going into the 1 hour, there's a break and retest of that confirmed breakout level. So to me, it looks like of course, you might be right. And looking at the daily, this looks like a resistance area, of course. But we can both be right, in this, and I guess that's the beauty of this. But I like the reaction that we're currently seeing on the 0.618 right here. So I'm going to remove the levels here and show you that blue line is the 0.618 right there, and that's where I want the reaction to come in. So if we start moving lower here, especially if we move below this level, then that's not going to be a trade for me. All right, guys, let's remember to if you're not subscribed to the channel, let's make sure that you are subscribed to the channel and like the video. While you do that, I'm going to be setting up the giveaway link and everything in the back end while you do that. If you guys have anything else you want to share, go ahead and feel free to share your screens.
Yes, actually, I didn't mention it. I forgot that I had a swing position on a Aussie dollar USD from the same setup that we discussed this. I believe it was yesterday. It did break the area that we indicated yesterday, but afterwards, I can show this because I do the analysis, of course, on TradingView. But after breaking that demand area, it actually tapped into and squeezed the order block. I will show you on, but this is the trade. a big fan of doing the analysis on MT5, of course, but this is the demand area. That is the neckline. That is the left shoulder, the head, the neckline. It breaks it, right, and then goes into that order block, which I expect or I wait for, right? That's the confirmation that I wait. Once it tells me on the lower time frame that it rejected or successfully retested that order block, that's my cue to get in. I didn't get a very tight entry this time because this is a different pair that I don't normally trade. However, I took this trade and I did a couple of orders in, and it's nicely in profit right now. This is more of a swing trade, so I'm not very interested in closing this quickly. I'm going to be waiting for on the H4, the D1 to see if we are closing and forming those bullish structures. We don't have anything of the like yet, right? You can see that we might have an outside bar being produced, right, being printed right now. If that happens, that could be one sign on the H4 that tells me that I need to hold this for much longer. Because if you see on the D1, the order flow is quite bearish yet. Right, we don't have any indication that this is going to reverse it. I want to see, before I hold this trade longer, I want to see some buyers coming in, some conviction, to some long conviction coming in. I don't see that yet, so I wait for the market to tell me that's going to happen. And if it happens, then I'm going to be holding this for. I put in the TP at the other side of the daily range. At the structure, actually, that doesn't mean that's where I'm going to be waiting necessarily, but that's the extreme where I'm willing to hold this if it continues to show me on the H4, H8, D1, and eventually also on the weekly time frame that I need to be holding this. But that's something I wanted to share in follow up on the trade, on the setup that we discussed yesterday. This is the trade from yesterday was invalidated, but the general setup was still valid, and that's why I took this trade.
That's exactly what I was looking for as well.
Were you?
On the Aussie,
nice.
on the Aussie New Zealand. Like I mentioned, that I wanted to see Aussie faking out that low from yesterday. And I do like the level where price could start looking. I was not at my chart when that price action occurred, so I didn't really enter, because otherwise the entry would be quite the same in there. And New Zealand kind of produced similar price action as well for a long. And I like your target. And the price action gets there, I could see even going higher, to be honest. But of course, for now, price needs to get there.
Man, so you did get a pretty good entry on that, Victor. Nice. We looked at that yesterday. We did look at that yesterday. That's very nice. Can you?
Yes.
You have to show me that again. Maybe you don't have to show it now because you just talked about it here in the live. But that's exactly the level. I don't know if you remember. We looked at that yesterday, and I said, I wanted to break down and kind of come down and test the level below. And now, obviously, I'm very interested in taking a position here. I just want some extra. I kind of need some extra confirmation on this. What's your TP on this?
The TP is based on the macro level. This is all the way up on. It's about 500 pips higher. It's not because I think that's where it's going to go, but that's the range. That's the maximum range that I can expect if. That's a conditional TP if the daily turns in my favor, which it hasn't yet. So if that doesn't happen at the end of today, tomorrow, and perhaps at the end of the week, then I'm going to be, adjusting that TP to something that is more likely to happen, which might be, either at around 150 pips above where we are or where of my entry is, or perhaps even less than that. I'm happy to take that. It's no problem. But this is the contrarian trade, right? As Pedro identifies himself with. I'm going long here. Why? If you look at the daily, it looks very, very bearish, right? Before anyone else even thinks this is going to be reversing. I want to be in that initial origin of that reversal. And that, of course, the price is that I'm going to be losing a lot, because it's super difficult to actually pinpoint the entry. But there are ways to increase your chances, and that's exactly what I typically do. And that's it. I just leave it on because it's something for a swing trade. It's not something I'm interested in closing today. So I'm willing to accept a lot of P&L swings on this. It's okay.
I'm long Euro NCD, by the way. So if I was going to show you guys Euro NCD, and again, I'm here with the tick chart to the 1 second chart right here. But as you can see, it shows market structure on the 1 second as well. So if you look at the 1 minute, the 1 minute candle. The 1 minute candle did close above here, so we do have that change of structure. And like I always say, you don't want to look at when you have the first reaction on the 0.618, you want to look at the retest of that 0.618. So you have, of course, you come down, get that low, create that double bottom structure where the right leg of the double bottom is higher than the left one, and it also retested 0.618. And then when we go down to the 1 second, which you can also say is a tick shot, right? You can see that there is there's a structure. The double bottom and the retest of the 0.618 is a structure on here. So you can see that you have, of course, the downtrend. You can view this from a fractal perspective. Imagine if you're looking at a daily and you're looking for primary trends, then this would be your primary trend, that would be your secondary trend, that would be your primary trend, and this would actually, in my opinion, be a change of structure. I wouldn't really, in the context of this trend, view this as the secondary trend because it's so much different than the previous secondary trends. You want to look at the behavior of the trend. You take that into consideration when looking at the 1 minute, where you also have a slight change of characteristics of this trend, especially now when you have this move right here. Now, of course, like with any trade, I might be wrong on this one right here, which is quite likely if I have to, it is rather likely because you still have a rather strong downtrend, but the fact that it's fairly high risk reward, and there is a shift of structure here, makes me want to add some risk here. Now, the invalidation, the stop loss is going to be down here, but really the invalidation, if I see anything other than a wick below this level, then I might actually exit it manually, and that's exactly what we're seeing right now. So let's see if this can hold, or if I have to close it. And we might also form a range in this area. And then if we do form a range here before or after me exiting the trade, of course, a break above the range highs would also mean that this level was the support that we wanted to get in on. Yes, I'm gonna set up the giveaway here. So maybe Victor or Pedro, if you have any trades that you're looking at, can put on your screen perhaps.
And I'm just analyzing the market, to be honest.
All right, so I'm gonna.
Yeah, go ahead, Victor. Go ahead.
All right. Yeah. So let's see on EU. This is the. Oh, by the way, I mentioned the. I when I showed my my trade, I mentioned that I'm going to show you the reasons behind that trade, and I actually forgot to do that. But the reason is this daily entry order block on Australian dollar against the US dollar, right? We had this structure from before, and I know it's even a weekly quasi, so it's huge, but this is the head of that quasi to me, right? And there are multiple quasis here at play. One is, of course, the huge macro where we are coming into. It actually broke. Let's see. Actually, let me start on the monthly so you guys see the whole picture. This is what we talked about earlier on, actually yesterday and Monday on this pair. We are coming back into an order block, which is a quasi to me, right? This being the left shoulder on the monthly time frame, right? The head that is the neckline, not the left shoulder. That would be the left shoulder. It breaks the neckline here, and it comes back to that entry order block on the monthly, right? So this is a huge mammoth of a trade if it does signal along. We did have some on the monthly time frame. We did have some this area as a or area or signal of a where buyers took over. And it's now retesting that area. So that's on the monthly time frame, right? Mind you, monthly, right? That would be this area. I didn't have it in because it's within a bigger monthly demand area anyways. If we go to the weekly, you can see that the previously it has been retesting and interacting with that upper border of the order block, the bullish order block, even after it penetrated a bit deeper into the order block, right? It tapped into deeper order block. It broke structure. You see that right there. Maybe I can zoom a little bit further. But the same thing we were talking, Pedro and I, about price just breaking structure with a wick. To me, that's a valid break of structure. So the bigger weekly quasi is where this is the head, that the neckline, and this the left shoulder, and it broke structure. It typically comes down to this entry order block, not this necessarily, but it comes to some structure before it continues, right, for the follow-through move. So basically, this is the structure. It breaks that neckline and comes back to retest some structure. And we did have a structure here, but that wasn't respected. And it's now currently at the last order block, bullish order block on the weekly, and presumably to making this move, right? It doesn't have to be this nice. It can, as we're seeing, it can do many things in between, but eventually this structure tells us that there is a chance of price going much higher, right? Actually, this is the target for because of this structure, right? 071, the high of this level, which is the high is, to be exact, is 71.57.7, right? So that is the weekly setup, and within that we have another weekly quasi within the quasi, right? The fractal nature of the market, where we have a established downtrend from that break of structure. I think this is the structure, right? That's the established downtrend. It is within the quasi, right? That is the left shoulder, the head. It breaks the neckline, and it comes down to some structure of relevance for the market. And the structure of relevance is this, and this is the reason why one of the reasons that I took the trade, right? This is the structure of relevance. Do you notice something that happened, right? Where does this current move, little reaction on the weekly, doesn't seem like much, but where does this move react from, right? It's the lower border of that order block, right? That coincides with the low of this candle. If we go to lower time frame, you can actually see a quasi from there, an entry order block on the quasi. Now, this has been retested before. You can see it here, right? And there was another one here. This is the third time for a fresh order block. It's no longer valid to be taken, but for a quasi entry order block, I have different rules for those. And that's exactly where price came in, right? It comes in, even squeezes that order block on the daily by a little bit, and then reverses, right? That's not a coincidence. It's not by sheer luck, right? It's because of that order block. At least that's how I interpret the market. And if we go to lower time frames, you can see how the market, even if you go to the hourly, you can see how the market reacted to that order, to that lower border of that order block. If you go to even lower time frames, you can see how I don't have let me mark the lower border for you guys to see on the lower time frame, because I don't have this as a visible order block because it's on the daily. I don't have it on the lower time frames, but you can see here, right, how the market comes in. Let's see if this is the actual order block that I took. I think it is. Yes, it's this is the quasi, right? The last quasi that was created, right? The established downtrend, That's the neckline. That's the head. It breaks the head. It breaks the neckline, but I don't trade it right away. I wait for it to come back to retest some order block before it does so, right? That's exactly the trade all the time that I take. It's actually quite simple when you think about it. The order block is here. This is the H5 order block. Not H5, 5-minute order block. There you go. That is just one time frame that it comes back into. You see this? That is not a coincidence. Actually, the order block is a little bit higher, is here, because we have an outside bar right there, if I'm not mistaken. Let me see if that is something that I had. 45.1, and this is 45.1. Yes, so the order block is actually a little bit higher. It comes back into that order block after breaking the quasi, the structure of the quasi, and it moves out. And that's it, right? You want to see that reaction, and that's the reason that I bought it. As you can see, I'm looking for that alignment all the way from sometimes even the monthly in this case, right? And I know this can potentially be a weekly trade. If it's a weekly trade, I don't want to be closing it today, right? So I want to have at least a portion of it being able to capture that move that is potentially in the cards for this trade, right? And now once you and I got in this area, and this is on the 5-minute, my entry, to be honest, wasn't a very sharp entry, to be honest. Normally I try to catch a much tighter stop of only a couple of pips, and now it was, I think, around 10 pips, which is good for a swing trade. But for my typical entries, that's a bit of a lousy entry. But it's okay. It's fine by me because of the higher potential on profit potential that I have. So that is the reason behind the trade. And yeah, I hope. Let's see if there's any question about it. Let's see in the chat. Please like.
We have a lot of comments on
this. Okay, on the link. The link is bad. Seems to be. That's the link for the giveaway.
Yeah, but the link is working. It's the link works. So those of you who can't join the giveaway, I've disabled the giveaway for United States, unfortunately, because we can't offer those accounts for people in America anyway. So if your VPN is set at the US or something like that, if you have a VPN, but I guess kind of like everyone has, then that won't work for you. But the link is working. I see that we have about 120 people claiming it. It should be working. All right, so I've gotten out of Euro NCD. Now I'm liking what I see on. Actually, no, I'm not sure. I can't really find much now.
Okay.
I do like gold on. Look into 1 minute. We do have like a very low time frame retest on gold, but yeah.
Someone is asking for analysis on the indices, US indices.
Yeah, if you want to look at that, go ahead.
Yeah, I could take a look into it. And in particular, SR is the S&P and Nasdaq. Which one are you looking at, or the Dow?
I want to look at I want to look at the S&P 500.
S&P, right? So I've been looking for shorts for some potential reversal since last week, and actually one of the reasons that helped me, kind of another correlation that I was looking for, it was actually because of the VIX. VIX was approaching an important level, as a level of support that has been kind of respecting for many years, to be honest, around 13, 12. So basically it was approaching that level again, and usually when the VIX is so low and it's about to kind of at least have a small bounce, usually that reflected in the US indices as a move to the downside, even though it may not be that big, but at least you should be expecting some kind of retracement. So that was one of the reasons also that I was looking for some bounces on the, at least some move to downside on the US indices. And starting last week, as you can see, we already reacted from it. Now even managed to break slightly level of structure in there. The price can just bounce in between these levels for a while. So that was one of the factors. Then you're looking at the S&P 500. S&P started to show a little bit of weakness last week as well, when it started to range. So usually, actually made a video about that, which was how to trade all-time highs. Like, so something that I'm trying to look at when I'm trying to find or to trade all-time highs, which it's slightly harder than trading any other price level because we don't have any information from the left side, as you know. But usually we are looking for price to go from momentum to start looking for some kind of weakness where you start having some deeper retracements, not just deeper retracements, but anytime we start breaking the highs, price instead of kind of gaining momentum, it starts losing momentum, it starts to retrace straight away until we eventually start looking for some lows being broken. And all of a sudden we go from a strong move to the upside like that to kind of almost a diagonal and then kind of a turn in here. So that's a little bit of the shape that you can see in here, to be honest, on the S&P until we eventually start looking for something like that. So that was last week. A little bit in here, we had the price action, we start breaking some lows, we start having that information, price move to the downside, and then the continuation as well. Now, question mark at this point is this low reacting from a good level? Like, at least something that I will try to consider is this low, did it react from a good level, or does it make sense to me to continue to look for more shorts in here? And basically, I would consider, even though I don't really like these levels in here, but we did react from the previous all-time high that was created back in November, right? So that just traditionally, if you just think in terms of structure, price breaking highs and then kind of test the previous level support resistance, it's kind of a valid level. At least it's much stronger, this level, than comparing with these lows, for example, or even that low. So yes, I'll be a little bit cautious in terms of looking for shorts at this point, at least until I have clear price action back at the highs. Something else that I try to pay attention to when you have kind of highs being created or a top being created, eventually to consider if I want to trade a double tops type of setup, maybe you can consider it, maybe it is already double top from there, but if you look into the higher time frame, maybe this is now the second reaction or kind of the second attempt that is trying to go into that level. So something that I try to do is try to see if there is any left orders behind when these highs were created. I kind of see two levels in here that price could still react from. Maybe this one, and then a little bit at the extreme. This one in here, price already reacted before moving to downside. That actually could have been a good entry in here. So that's more or less what I'm going to be waiting to see is how price is going to react from somewhere around this level. If it just continues to move kind of in a straight line like this, I'm not really going to try to participate in here. Just let price go. But if price by any chance starts losing a little bit of momentum as price is approaching to the upside, for example, it could react first from this level and then kind of pause a little bit and it continue to go, but start maybe breaking some lows or maybe some kind of a trend line in here until eventually they'll have some kind of turn. Then maybe I could consider to look for another short in here. Something to consider is that it's all-time high, so there's always a risk for price to create a new all-time high before reversing. That's another tricky situation of trading all-time highs in here. So yeah, that's a little bit of the buys that I've been having in here on the S&P since last week. It started with the VIX, and then it's starting to with price also starting to see some weakness on the S&P, and eventually the trade was there. In the space that I was looking for, the target in this case, it was actually more of the retest into this next structure in there. We look at Nasdaq. It kind of goes in similar ways. So one of the trades as well that is possible when you are trading all-time highs eventually is to expect the retest of the previous level that was broken. Like if you just broke this high, and on Nasdaq it was actually quite important. It was a level all the way back since June or June. This was the most recent one. Okay, yeah, but usually a target that you can look for is retest of that level. All right, so if prices starts moving to the upside in a strong way without really having kind of a breakout setup of breaking, retesting, and going, if that level is still fresh in there, then you can try to look eventually for a trace towards that level. So that can be a short opportunity that you can look for with a specific target, which is to retest that level or getting close to that level in there. On the opposite side, anyone that is still bullish, it's a good opportunity to potentially going long again into that setup. Right, it's just trying to find high probability levels that price may wants to go towards to react, to respect, and then kind of move again. in here. On S&P, sorry, on Nasdaq, I may still like a little bit of that level. As you can see, this level in here was already respected. So basically the same level that you're looking for on the S&P that is still fresh. Nasdaq already reacted from it. So when you are looking at correlation as well, you can look at the levels that are being created at around the same time and try to see which ones have been already respected or not. And usually, yes, if price kind of respects, if one of the assets respects that level, that may be indication that the other one eventually is going to respect that level as well in the future. It just may not react as the same way in terms of having such a big move, maybe just a smaller move and then go. It depends. But this is just a few levels. So yes, on the S&P, on the Nasdaq, I may like a little bit of that level. I'm okay with where price reacted to. It didn't really went all the way through to react from the previous all-time high, but this demand zone is quite valid, to be honest, in here. So that was a level in there that I was looking as well for price eventually to fill in here. So yeah, we'll see. Kind of similar situation. If you start seeing some weakness closer to the highs, maybe can have that sell opportunity. Otherwise, all-time highs, I may just wait actually for price to break new highs again and try to see some weakness. Yes, I'm crazy enough. I'm actually looking more for shorts even in the all-time high situation instead of looking for longs. That's kind of how my brain works a little bit as well. I tend to look for more shorts than longs for some reason. It's just basically what I'm looking for. It's actually something that can happen here is that we did manage to break this structure, even though we reacted from that. So if by any chance now, if I'm looking for something like this, or maybe some people they may consider this almost as a potential closing model in here. I don't know, price break goes there. But something that you can look for is now even wait for this new fake out and potentially start looking, because we indeed managed to break some structure here. So that's also relevant to start paying attention to in here on this. And if any comments or... But
I like that. I like the fact that you talk about how you're more interested in taking shorts, and I'm absolutely the other way around. I'm more inclined to look for long positions, but it's definitely interesting to to hear the other way around. And I think looking at I don't know. Have you looked at your statistics and see if you're more profitable going short as well?
Yeah, it's true. I think I like gravity for some reason. I think things will drop instead of going up.
That's
and usually when you actually look for shorts, sometimes the move to the downside can be more aggressive, can be quicker, while the move to the upside may take a little bit longer. So that's something, I don't know, I actually like it. Sometimes it can be just a straight move in 1-2 candles and then the move is completed, while when price is moving to the upside, it may take 2, 3, 4 days, and then in one day corrects, then goes again to the upside. Yeah.
Hey, I know what to say. It's the staircase up and the elevator down, and I think that's definitely true in trading. You can have a nice and stable uptrend. Everyone is bullish. They keep buying. It's a nice and stable uptrend, but then uptrends they usually break on high volume, peak euphoria, and then when you're at peak euphoria and something unexpected happens, it's much easier to go from euphoria to panic than it is to go from a stable state of mind to panic, right? So we'll look at the markets and we'll look at trends, and basically what it is, it's trends develop because humans react by emotions, looking at price patterns, and it's repeatable throughout time. We've had the same emotions for all time when the markets have existed. So all these trends based on these emotions, and when we have a stable economy and stable trends, that usually is a bullish scenario. And then of course when something unexpected happens, that trend breaks, you go from euphoria to panic. And that's usually why the down moves are happening on high volume, and they're quite intensive.
And you can see it on the chart as well, right? Because what you are looking for eventually is again, as I mentioned, price goes from that move. 1 second, just zoom in a little bit. Price goes with that momentum where there are bigger candles moving up and down, but then eventually starts to compress a little bit more, right? And I'm looking for this compression. Basically, this compression is like, if there is a demand in here, it's basically price collecting the orders from that level and then goes to the upside, breaks new high, and keeps going like that. But the reality is that all these orders are starting to be collected. So there's no orders left behind in here, which then when eventually price turns, it's just easier for price to just move all the way and to fill this range in here because there are no orders. Price has been collected already on the way up. So it just makes it easier. Again, you can find that as well when price is moving down. Like this compression concept is not just for as price is moving up, it's the same thing as price is moving down, and then eventually you'll have that type of a move. And you can actually see this type of move tends to correlate as well with some high impact news. When you usually see that big kind of going up or down, sometimes it's just to fill this space that was already kind of everything was compressed in here. So there are no orders. Basically, price is free to go into the next level, whatever that level is. In here. So that's actually a good anticipation when you are looking for trading some news. Try to see if you do find any kind of level of compression on the approach toward that level. And if you see that, and if you even see a break of structure into that compression zone, yeah, that's a good indication that most likely price wants to fill out that space, maybe with the news. That's another clue that you can start paying attention to be honest, in here.
That's amazing, Pedro. Yeah, that's amazing how you when you talk about compression, and what I see is me, from a viewpoint of order blocks, what you're explaining as compression, I would call mitigated order blocks, right? If you already have mitigated those order blocks, that they become weaker, and as price is going higher, when it comes back to those order blocks, because they're already mitigated, they have a bigger or a smaller chance of reacting to price, or price reacting to those order blocks, meaning it's gonna more likely to just continue going much lower. That's a looking at the same price action, just through a different lens, but it's basically getting to the same conclusion that you're saying, right? Those compression where price comes back, and those but making higher lows all the time. Within that higher low, it's also mitigating those order blocks as it goes up, taking away those pending orders, that those orders, as you said, that we're waiting for it to be executed. So there are no orders there next time it comes around, and it's more likely to just go through it like a hot knife through butter.
Something like that.
Yeah. Let's see. So what do we have here? How the analysis you did on S&P, while saying you said you're happy to go against and of course that's why you call yourself a contrarian trader. You go against the trade while S&P and others are making all-time high. You're still open to look for a short, right? Not necessarily that you're going to be shorting everything, but you're looking for a possible short if that presents itself. How do you do? Do you do this with every asset, or is it just the equities that you're going to shorting or looking for that short opportunity on that asset making all-time high? For example, do you do that on Bitcoin as well? Is it something you can translate into Bitcoin, or do you say no, Bitcoin is a different animal? I need to have a different set of rules for Bitcoin.
Yeah, that's a good question. I think it's a good and it's good to have in consideration what kind of asset you are trying to trade. Like again, S&P, just by nature, in theory, it's going to go up over time. Like that's kind of the nature of the S&P. So I need to be aware, for example, in terms of targets, if I'm by any chance looking for that short, I need to be conservative in that case until eventually something will happen, and maybe you may have a strong or a bigger correction in the market. Like for example, we had in the summer a little bit, or mostly in the summer. In June, July, kind of had a good correction, 10% or something like that on the indices, and it was possible to identify also that move. Bitcoin, it's of course it's a completely different scenario, completely different asset with a lot of kind of involvement from the mass media. Like everyone likes to jump quite aggressively on Bitcoin, but you can take the same approach as well. Like you can take the same approach, but be careful, like because the moves are more aggressive. And again, just a similar scenario as well of a strong short that basically took just a few minutes to occur, opposite to the move to the upside. But I'll be much more conservative or kind of defensive with Bitcoin. I actually made a prediction with Bitcoin like 10 days ago or something like that, when price haven't really broken the all-time highs on Bitcoin. Maybe I can try to find the image. But it was basically try to understand a question that I like to ask myself, or an exercise that I like to do, is how could I manipulate as much people as possible and create confusion in the market to then end up moving the market to the direction that I wanted in the first place, right? So if you by any chance you do want to continue to push Bitcoin to the upside, okay, 110, 120, who knows, 150 or more, but how could I actually manipulate everyone that is trying to go long right now to make them go into a fear mode, which maybe they are actually going to close their positions, and anyone that may be trying to sell at I don't know, at this level of resistance at 100k, also to manipulate them, right? But for example, we had this strong level of resistance in here at around 99, like it stayed there for a few days until finally last week we managed to break quite aggressively that move. Like, so how can a kind of, how would you do it? Like, if you were the market maker, how would you do it to create confusion and to manipulate all these trades? That's kind of a good exercise, and you're going to end up realizing that price tends to move more or less like that across many assets. So that's a good exercise to have in here. Right? If I actually show the image that I kind of 1 second, see if I have it. Because that's actually, again, if I was about to ask you something like that, how would you do it? Like, what kind of I think it's in here. 1 second.
So basically, you're trying to think up of a scenario where the participants, the buyers and the sellers, they get triggered, right? So you're thinking, what scenario will get them triggered to either close their position or buy more? Basically, you're trying to you're looking for that pain area or pain level where where do they start feeling the pain, so that they will actually do something. The market is there to transact, and it's looking for opportunities to transact. That's the idea behind it. I like that idea. This is your prediction that you had on Bitcoin.
Yeah, on Bitcoin. That was the exercise, right? So I had this level of structure, basically this demand zone. I hope everyone can see it. Price was trading in here. I think this was kind of on the 25th or 26th of November. And I wanted to see actually that move to the downside, kind of price breaking this level. I think that this for me is one important demand zone. And that would kind of maybe start signs or signal a little bit more of a bearish sign in here. We just broke at these lows as well. So I think many people that were trying to sell at this 99, or kind of trying to make that resistance work without avoiding price to go, or Bitcoin to go above 100k, they were kind of happy. Like, we need to think about happiness and fear for the traders. So anyone that was short, as soon as they see these lows being broken, they kind of start being happy because they are in profit. Like, they think that price now is ready to move much lower in here. And everyone else that was long, he starts being a little bit concerned, especially anyone that was long most recently. They start to be a little bit concerned with seeing price going again back to their maybe entry level or something like that, right? So maybe that can also force a few people that were long to start closing their positions, just especially anyone that traded for the last 2 weeks in here. But in my opinion, I think price was indeed about to break above the 100k. I think that level was there to be taken. And I wanted to see, personally, also a strong move. Like, I wanted to see an aggressive move of price breaking that level. That's why I have kind of this aggressive move in there. And what will that make? Like, so at this point, everyone that was selling, they lost their trade, right? So everyone that was trying to sell at 99, they basically got stopped out with this move. And another typical move that many people were waiting, it was to get or to jump into the market as soon as price would break 100k. Like, they would be looking for that breakout setup above 100k. It was such an important mark in here, a level of resistance that everyone was looking for. And then what I was looking for is that, break with momentum, make everyone feel excited with the possibility that price is now ready to skyrocket and go to the moon. But what you do after that is actually just bring price down straight away. Like, so everyone that actually now starting to try the breakout setup at 100k, they're going to be stopped out, right? Because they're going to have the stop loss nearby, maybe at 98, 97, whatever it may be. They're going to be just stopped out immediately if price actually was about to do that. Now, price actually already kind of spiked the move that we saw 2 days ago. It already spiked below this one here that I had. In my opinion, I think price of Bitcoin could actually go a little bit lower. We haven't really retested that 74K that was the previous all-time high, or at least a little bit closer into this level. I would like to see that. And yes, after that, I think price will finally push the upside. But if you imagine that price would now get back closer to 80K or close to retest the previous all-time high, anyone that was long since the US election or a little bit after that, everyone would be scared at this point. Like if price by any chance starts to go below 90K, I think many people are going to be scared with the type of position that they have open in that level. So that's going to create fear again, and of course going to create some happiness for everyone that is short at this point. And then yes, eventually price now could go above 100K. Now start trading and stay above 100K, eventually to go 110, 120, whatever it may be. Right?
Yeah, I like
the exercise. You could do this. You can do this exercise, and if you actually start understanding a little bit more of this type of price behavior of the emotions that you can create with that the market creates for the traders that are involved in each one of these positions, it starts making sense. And then you allocate that thought process with the patterns that usually we can see in here, right? And then everything kind of goes a little bit in alignment.
Yeah, it's a very common, very relatable narrative that you just explained there. Basically, looking for where traders are going to get trapped, right? Where they are likely to get in, and where their pain or their stop loss are likely to be at, and that's where the market goes to a lot of the times before it actually makes its move to the other direction. So it's a great exercise you mentioned there, mental exercise to think of what is likely, what is one of the possibilities, what price or the market is trying to do or needs to do in order for traders to get trapped. So if you apply that to euro dollar or any other forex pair, would you be trading the initial fake out move, or which part of the move are you going to be trading? Actually, not only on forex in general, which leg of that move are you going to be trading? Are you going to be trading the last one, or every fake out, fake breakouts that you see? Like, are you trading both sides all the time?
You could, but both sides, you mean kind of short in here and the potential long in here, if there was an opportunity in there. You can, depending on the size of the move, you can do that as well. In this case, not exactly, because it's basically just a week. I like to see price action around that level before going long, but that you can literally, if you think kind of a quasi mode, you can trade the high, and you can also trade the break of structure if price is starting to eventually expect retracement towards the right shoulder. You can try to look for both trades in there. It depends on the size of the trade. If it is more intraday, maybe I'm just going to try to trade one direction. But if the pattern is maybe kind of a week long to be created, maybe you can short one day, kind of two trades later, you have the move to downside, and then you can look for a long in there. You can trade both, and then try to trade again the right shoulder in here, in there. Yeah, you can do that.
Nice. The fact that you have that little wick encircled, is that exactly that little wick? That's the sign for you that the market is in a reversal pattern, where it broke some kind of neckline or support structure that is eventually going to make lower prices. Is that the reason you encircled that wick?
You could use it as such, but knowing, and this is maybe where the understanding the asset that you are trading, knowing that is Bitcoin, I'm not going to just make it kind of certain that price wants to go lower without breaking all-time highs. You can use it as in different ways. One, yes, maybe I can see that maybe price wants to go lower based on this. Another factor is that when price eventually retests this level, I may not really I may not really be interested in looking for longs on the test of this low, because this low already broke structure on the left side, which makes it weaker. So I may not really be interested in shorting, in going long in here. Whenever price retraces this level, I may just ignore it and expect actually this level to be broken. And if I'm looking for longs, then I'm going to be looking for longs underneath that level in here. Because we are at all-time highs, I'm not going to just say that price will move to downside before breaking highs, because you can start to make these kind of plans in terms of if then, or what is the probability, right? When you have a break of structure, you may want to say that price most likely is going to break a kind of retest something in here before potentially breaking point A, kind of the high there, right? So most likely price wants to go to C first before breaking high A. But you need to be, again, all-time high. There's nothing on the left side. I like to have structure on the left side to help me to identify that, okay, that's a really, really good level, and from here I'm expecting actually price to move down. And when it's all-time high, it's a little bit more complicated. But I do find it valuable and useful to keep track of this breakout structure, because in the future, when price eventually actually turns, and if you have a few lows being broken on the way, then you can have actually a much bigger reversal. Next, actually, when you have a major reversal, is actually when on the way up, price already broke a few times some lows, and all of a sudden, all those lows are not ready to hold price anymore, and all of a sudden you can actually have a bigger turn in here. So that's kind of the build up into a potential bigger move. But I would leave you more for this somewhere else.
So basically, it helps you identify which structure has already been broken to have an idea how far that last move down would be. In this case, down, right? That's that makes a lot of sense.
It works as a target. You can start using this information as a future target for the type of trade that you're looking for. So this can actually help you tremendously in terms of target in managing your expectations. If you start having many lows being broken on the way up, you can start expanding the level that you are looking for your target. If there is absolutely no break of structure, and you are trying to short something, but there's no low being broken, your target needs to be the most recent low. There's no point in trying to look for something bigger than that.
I'm okay, so 100% with you on that.
Let me know when.
Go ahead,
let me know when you're done with that. I'm gonna take a look at the trade. I'm in. Okay, so I'm in a GU trade here. It's a small position. I'm looking to add to it. So I want to show you the levels here. We have on the 1 minute. We came down and we tested this level. We had a strong reaction and a strong candle on the 1 minute here, and then again going down into the I guess lower time frames, we have a reclaim of this level right here, and this tells me that we are seeing a sharp reversal and a lot of buying pressure coming in here. You could view this as a V-shaped recovery. Now, of course, this is on the 10-second chart, and when you're looking at patterns, again, like there's not really a lot of research being done on the second chart, so you can't really put any statistical advantages to this. But what we see is obviously the buyer stepping in at this level. So I'm looking to take GU higher here. So let's see what we get on that one. Now, of course, if we get above these highs, that's when I'll start managing the position. So we get up and move like this. If this is a loser, I'll be about break even on today's trading session. And at that point, I'm just not gonna continue trading. We had someone asking about Bitcoin as well. So let's take a look at that. Someone said, Bitcoin, my 6 months in the 6 months in the future. First, he asked me 3 months in the future, and then 6 months. And it's quite difficult. So obviously we're looking at Bitcoin right here, and I do see a level here on the MVRBC score where I do believe that we're probably going to see a rejection, and it aligns quite nicely as well with the upper upper band of the buy zone here in the regression chart. And by the way, this indicator was recoded by Dirk. So if you want to get that indicator, you can search for Bitcoin log, and then you have Bitcoin logarithmic regression charts by Crypto for Money, and that's Dirk Hartig that we have on these live streams from time to time. And it's a really good way of looking at the lows and the highs of Bitcoin long term. So looking at the future of Bitcoin now, I know that I've said this before. We got inauguration coming up here on January the 20th, and I believe that the basically the Trump trade. I view the Trump trade from the election day till inauguration. So from election day right there till inauguration, and we're about halfway between election and inauguration, and I'm watching the inauguration as a sell the news event. If election was buy the rumor, because that's basically what it is. This is a very obvious, in my opinion, a buy the rumor, sell the news, right? Because you have people buying the rumor of what Trump will do, and then when Trump actually comes into office and it's time for him to actually, put these practices into the real world of potentially adding Bitcoin to the natural reserve as a possible strategic reserve currency, and that's obviously a dream come true for the whole Bitcoin community. Will it happen? Probably not. If it does happen, that's going to be insane. And if that happens, then the we're probably going to shoot above this, right? But I think that inauguration will, a super cycle. That's definitely a super cycle, because every other country is going to be like, all right, well, we don't want to do it, but now we have to because America is doing it. They kind of have to follow because they're going to be left behind. And everyone knows that if America goes down that route, we're gonna have Bitcoin is going to increase in price. It's an obvious trade, So everyone's just going to pile in, and then the Bitcoin that's available is it's you can't just print more Bitcoin, so the price will go up. That's the whole that's the way it's designed. But anyway, I'm thinking that inauguration will be a sell the news event, so I'm looking at a move lower on Bitcoin when that time comes. And in a this is a good point. I mean, I don't believe Trump. I don't think he can just order, do a presidential order or whatever that's called. That has to go through Congress, and it's going to take time, and it's going to be a lot back and forth, and it's not 100% certain. I mean, he's going to try to do it maybe, but will he do it? We don't know. So in a Bitcoin bull market, prices can retrace, 30% easily. So where is 30%? Well, that's going to be down here at that level from current prices, okay? And there's no saying that we have to go higher from this point inauguration. I mean, if you look at this range right here, that was the high, and we didn't break that high until 238 days later. So this is a rather big range. So if you think that Bitcoin cannot stay in this area for a long time, well, then you think again. We have the potential to stay up in this area for a very long time, which means we might be, ranging up here for about a month till inauguration. That's completely possible. And if we do that, then it move down to, back down to the breakout area, which, what level is that according to the fib? Well, you know exactly what level that is. That's going to be the 0.618. And it's funny how it happens so often that the breakout level is just in perfect confluence with 0.618, and that would also coincide from the high down to the 0.618. That would be a 30% move to the downside. And even looking at a 50% move to the downside, which is in extreme cases possible in a bull market as well, you have these lows right here. We might even come down, like if there's a massive event, maybe there's, a sell the news event at the same time as potentially escalation in Europe or something like that, we might have an accelerated move to the downside. But even with a move like that, looking at Bitcoin from a weekly perspective, we could still say that this might potentially still be a bull market, especially if we come down and hit that level. If we hit that level, that probably means that we're hitting the low of this band, which can definitely happen. If we get that type of event and we get that type of move while still technically forming a bull market, and what I mean by technically forming a bull market, and I'm looking at the weekly here, we don't want to be seeing something, we don't want to see this, we don't want to see this type of pattern and continuation to the downside. I mean, if we see this, then yeah, that was the inauguration was to sell the news event, and that was the end of that cycle. But that will not happen unless the overall economy goes into a bear market. And what I mean by the overall economy, you can look at the S&P 500. Unless the S&P, if the S&P 500 and the overall macroeconomics remain bullish, then there's no reason for Bitcoin to really trade to the downside. But because there's nothing fundamentally changing with how Bitcoin operates. So if the general consensus of the market is we're in a risk on environment, then Bitcoin will be in a bull market as well. So the dump that I think will happen around inauguration, it's important that we don't completely break the bullish structure here on the weekly. If that happens, then we can look at to the future. And the future is this level right here, which is in August, the end of August or the beginning of September in 2025, where I believe that we have a highly likely top of this cycle. Remember, Bitcoin moves in 3 to 4 year cycle, and I do believe that that's going to be the top of that cycle, unless we enter a super cycle because of Trump. And this level is made by looking at all the different halvings. So we have halving 1, 2, 3, and then the most recent one, number 4. And we look at how long time does it take from the bull market starting at halving and to the top. So that's halving, that's the top, that's the halving, and that's the top, that's halving, top, halving. Where should the top come in? If you look at the average day from halving to top, it's going to come in around the end of August to the beginning of September next year. And that means we have about, from current prices, we have about 260 days left till we see that. And if I would have to guess what I think market structure will look like leading up to that point, I'm looking for a big move to the downside here, a move that liquidates a record number of people. We're gonna move down. We're gonna see Bloomberg talking about how Bitcoin liquidated hundreds of millions of dollars, and everyone is gonna panic, and you'll see that Bitcoin is dead, Trump is wrong, blah blah blah. We're gonna hold support, and then we break back about 100k. That means we also break out of this channel, and that's when the real explosive moves are going to come in. Now what's interesting is if because I know if you're interested in Bitcoin, if you're interested in crypto, you're probably interested in altcoins as well. So it's important to understand when altcoins starts to move. So altcoins, they move very bullishly when Bitcoin is bullish, but it's consolidating, right? So if we are going to consolidate up around these areas, which can be quite likely, we might form a range around this area till inauguration. That would be insanely bullish for altcoins. And then I would just look to trade altcoins in this Bitcoin range while it's holding strength, and then sell at around inauguration. And we can take a quick look at wow, I'm in profit on GBP USD. I did not expect that, actually. Very good structure here. Never mind, I don't want to look at this.
We had cat news about 2 minutes and 50 seconds ago, which was the Bank of Canada lowered rates, and that moved the market by. I didn't want to interrupt you, Jonathan, but that's, if I may just put on the dollar CAD right now, you can see how this is the minute chart and see that move. And that's because of the news that came out about 2-3 minutes ago. And that's why people in the chat are asking what's happening with the Canadian dollar. It is that move. It's the Bank of Canada lowering their rates. And that is usually one of the biggest catalysts for Forex prices, right? The central banks changing or not, sometimes their rates, interest rates. That's how they manage. They try to fulfill their mandate on their economies. Right, so that's the U.S. Dollar CAD having a huge move based on the rate decision of the Bank of Canada. Continue, Jonathan, if you may.
Yeah, so looking at the altcoins here, if you're interested, if we think that Bitcoin is going to consolidate around this area, which I kind of think it's quite likely, because now also you have Christmas coming up, you have all the all the holiday seasons, New Year's and everything, and the market is not going to be trading as actively in around that time, and of course the action picks up again in the beginning of January, but then we know that the inauguration happens on the 20th or around the 20th. I think it's the 20th. And I think people are kind of waiting for that, expecting something to happen. And in those times, just like before you have major news event, the market kind of, stalls, takes it, goes down in volatility and volume. And if we see that on Bitcoin, then the altcoins are just looking ready to do something huge. Look at something like Link, and we can look at Link from the daily. Had a big move to the downside. A lot of people got liquidated on this one. This was a high volatility move to the down. So you can see the wicks here on the 1 hour, and it's the big move to the downside. But what happened really was just resetting after a major move to the upside. And if we had a level on that, like that was just a very good retest right there. And all the altcoins are recovering from that move to the downside. We're retesting good levels. And I want to show you one altcoin here that is just showing such a beautiful market structure. First, we have the symmetrical triangle right here, where you've had that break and retest of that trend line. Just picture perfect for the technical analyst nerds out there. This is just picture perfect stuff right there. And so we can look at, like, get rejected here, comes down, hits the reload zone prior to the breakout, and guess what level it hits on the retest? Well, it goes down and it hits that reload zone right again, comfortable with that level. So I remember sharing this, and we got in around this level, right? And then right here on that bullish engulfing candle here on the 4 hour is another opportunity to get in on this. So this shot, I have no idea what it is. It's KMNO. I have no idea what this is. This will either go up or it's going to zero. So I have no idea what this is. Do not invest in this. Do not follow me on this, because you will most likely lose all your money. But it is showing a very, very solid market structure right here. And a lot of the different altcoins are showing a good structure, especially some of the bigger ones like AVAX and Link, and also look at Ethereum. It recovers right here quite nicely. So yeah, we might be in for some really interesting moves in the crypto market leading up to inauguration. So that's my overall outlook on Bitcoin and the altcoin market going forward. So yeah, we're going up probably, or down. We're going up or down. That's up or down. Probably
I think
up.
you're absolutely right, Jonathan. You're absolutely right on that prediction.
Yeah, I think though
sure.
we're definitely going down before we're going up. I think that's the case, guys. I think it's ready to roll out the giveaways. I'm gonna get that ready. and I'll set everything up and make sure that you are in the giveaway. We're going to be doing this live here, and today because we have Pedro here. Pedro has promised that he's going to give. No, I'm kidding. But we're going to give away 2 accounts in this live stream today. 2 accounts we're going to give away in this live stream today. Let me see.
All right.
Just going to share my screen here.
Yeah, big move on the dollar CAD.
Yes, indeed, we do have a very extended move on the Canadian dollar.
Yeah, that's a big one.
And it seems it's not over. We're talking about this 5-minute candle has reached 66 pips, which is
wow.
Yep, that's a very big move.
I don't know what was the.
Go ahead.
I'm trying to see trying to see if I have any data on that. Can't find anything now. Oh, that's because I don't have any internet. That's weird. All right, guys, let's run the giveaway here, and I would like to thank you all for joining the live streams here this week. It's been very fun to be live trading here on Tuesday and Wednesday. My GBP USD trade did hit stop loss, so I'm a break even this session. Spent 2 hours, made no money. It is what it is. That's the life of a trader. Hopefully next week we can get some really good trades in. To be fair though, it has always been like the first trade of the session that has been the best trade and the profitable trades. And then the longer we go, the less good the trades are. And I guess that there's definitely a lesson in there.
There's a pattern in there.
Yeah. Okay, let's go. We're gonna draw the winners. We have 2 winners today who are both winning a 20K boot camp account. We got Jason K and Kim D. All right. Congratulations to you
Congrats.
2, and you will receive an email to the email that you registered on this giveaway. Also, I know that I've been getting some emails from people that have not received their accounts from previous giveaways. So I'm going to go through those emails and make sure that you do get the giveaways. I do understand that in bootcamp week we give away quite a lot of accounts, and some of those did not get received. So we're going to be double checking, make sure that everyone do get the account. All right, that's it. Thank you for joining here today, and thank you, Pedro, for joining as well. And if Victor did not get disconnected, he would say the same thing. All right, thank you all for joining.
Thank you guys. Thank you very much. Have a good week. Bye-bye.
Take care.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.